Hello everybody and welcome back to another temporary lecture. In this one I'm going to be teaching something I don't see anywhere else, and it'll really solidify your understanding on how to use SMTs. So that's going to be your directional SMTs versus your momentum SMTs. So directional SMTs are the highest time frame SMT that you are referring to, and then momentum SMTs are lower time frame SMTs that support the directional SMTs bias. So it's very straightforward. So let's say you have a 4-hour SMT as your higher time frame SMT. Then anything below that is going to be a quote unquote momentum SMT. So the highest time frame determines which direction the market is likely to go. And then your momentum SMTs are pretty much confirmations of when you should be looking for a trade or a setup. And so this is really effective because if you use directional SMTs correctly, that just means you've set your directional bias for, let's say, the daily candle or the weekly candle or the monthly candle, meaning you have a monthly bias, you have a weekly bias, you have a daily bias. So it's very effective. The momentum SMTs are very effective because they tell you when the market is ready to expand. And just like in market maker models, we look for SMTs to tell us that each phase is complete within a market maker model. And so here I've included a diagram to show you guys what I mean by directional versus momentum SMT. So directional SMT is going to be your highest time frame SMT that you're referring to. So in this case, I've included down here the quarters of a higher time frame cycle, intermediate term time frame cycle, and then a lower time frame cycle. And so example, you could use this as a monthly cycle, weekly cycle, and then the daily cycle. Or you can use a seasonal cycle, you can use monthly cycle, and you use weekly cycle as the lower time frame. So as long as they're pretty much pyramiding on top of each other, you're referring to the cycles directly below. So if you have a yearly cycle, you're referring to the cycle directly below. The intermediate term time frame cycle would be the seasonal cycle. And then from there, you want to refer to the cycle directly below that, and that would be your monthly cycle, right? If you want to use the monthly cycle as the highest time frame cycle, then you can use the weekly cycle as your intermediate term time frame cycle, and you can use the daily cycle as your lower time frame cycle. So whatever SMT is on the higher time frame cycle that you're referring to, you're going to be using that as the directional bias of whatever candle you're trading. So if you're using the monthly cycle, you're trading the monthly candle. So if you have a SMT between a previous week high, previous week low, in this case, it would be a previous week low. If we're considering the higher time frame cycle as a monthly cycle, then you would look for that to be pretty much the low of the month, unless you have an opposing directional SMT. So until we have that opposing directional SMT, we're going to be looking for bullish price action throughout the entire month, right? All right, so I've just gone ahead and quickly annotated for this example just to make it a little easier for you guys to digest. So in this example, we're just going to refer to the higher time frame cycle as the monthly cycle, the intermediate term time frame cycle as the weekly cycle, and the lower time frame cycle as the daily cycle. Once again, you can interchange these cycles as you'd like. You just move it up one or move it down one cycle. So once again, if you have a directional SMT, let's say on the higher time frame cycle, in this case, the monthly cycle, then you're pretty much looking for bullish price action for the monthly expansion. And until you get a directional SMT that opposes this initial directional SMT, you're going to be looking for bullish price action pretty much. And so on the intermediate term time frame cycle, once you have that SMT, which is the weekly cycle, then you're going to be confirming this higher time frame cycle, and this is where your longer term positions ideas are going to stem from. So for example, if this occurs, then you're looking for a longer term long in this case because you're bullish, and you're going to buy down here. And then you're going to ride it until you have an opposing SMT that is directional as well. So let's say over here gets confirmed, then you pretty much exit over here. So that's how you enter and exit based on SMTs. And so if you're more so trading an intraday level and a lower time frame cycle level, then you would be referring to whatever your higher time frame directional SMT is and what price is doing while it's still expanding. So while we don't have the opposing directional SMT yet, we're going to look for continuation. So here we're bullish because of the directional SMT, expand higher. Here we don't have an opposing directional SMT yet, so we're going to refer to our intermediate term time frame cycle and our lower time frame cycle to act as momentum SMTs to continue pushing price higher, right? Because we don't have a directional SMT yet. And so this is where your shorter term trades are going to form from the idea. So once you have your bias based on the directional SMT, you're going to use your lower time frame SMTs to give you that confirmation that price is ready to expand. And so this is why in the SMT lecture, I explained that whenever you have SMTs in each market maker phase, that confirms that price is ready to displace or to expand. And so in this case, it's your intermediate term time frame SMT to lower time frame SMT. You have time-based liquidity SMT, right, with the intermediate term frame cycle and the lower time frame cycle. And then you have stacked SMT. And so that's your confirmation to get in on this trade. And so finally over here, I've included this opposing directional SMT to illustrate that's when you would switch your bias. So up until this point, if you have a higher time frame directional SMT, then you're going to wait. What are you going to wait for? You're going to wait for it to be confirmed, right? So you need a intermediate term time frame SMT to get created, and then that will confirm your higher time frame SMT. And that's when you will pretty much switch the bias and you're going to look for lower prices. And so I can pretty much invert the diagram here. I know it's not super pretty because the text isn't lined up. However, just pay attention once we have that opposing SMT, right? Let's say here we're switching bearish, right? Then if we were to continue it, then we're switching bearish from here. We're looking for lower prices. It's the exact same thing, just flipped around. So I hope that helps you guys understand how directional SMTs and momentum SMTs work. And as always, have a great day.